Welcome to our weekly Forex Forecast. And today we are going to prepare for the upcoming week of September 23rd to the 28th, 2019. Just a quick disclaimer here, this is for educational purposes only. Trading is a risky business, so please be careful with your money. All right, as usual, we'll get started with our Forex Factory calendar. So let's take a look at what's coming up this week here. So just to confirm, can you guys hear me? If you could please type a yes. Yes, okay. So it looks like the volume is okay. If you're having issues, that may be the speakers at your end. So let's get going here. All right, so to start the week off here, we have PMI numbers coming out of the Eurozone. PMI numbers, they are leading indicators, and if the PMI numbers are good, that means the retail sales will be good, as well as the GDP numbers are likely to be good as well. So these numbers are very important. So if they come in below expectations here, we are likely to see the euro drop, and if they are better than expected, we're likely to see the euro go up here. Now we also have ECB Draghi speaking here. So ECB is likely to push the. So Draghi is actually no, sorry. So ECB here, it was negative last time we heard from them. If we hear more comments that are dovish or negative, then we are likely to see euro drop. But we also have FOMC members speaking. And with FOMC members here, generally what happens is they will basically give their comments on how they are thinking. And generally we see that when FOMC members are speaking and they're dovish, they're not feeling very comfortable with the state of the economy. We generally tend to see the US dollar drop as well. And then we also have Bank of Japan. So it seems like it's a big bank day here. So we have Bank of Japan, Governor Kuroda speaking. Bank of Japan hasn't really done anything in terms of monetary policy. They have been talking about how they're going to keep the expansionary monetary policy, but their interest rates are so low that they're in the negative. So we're not really expecting them to do anything unless we see that Japanese yen becomes very strong. For now, they're in the wait and see mode. Actually, on that note, another thing we have to pay attention to is also what happened on Friday and over the weekend here. So with that, we saw that the U.S. had blamed Iran for the attacks on the oil fields, the Saudi oil fields. And that situation could escalate. So it has been okay for the last little bit here. But just over Friday and over the weekend, there have been more comments. So I would suggest you either read these stories or go to Reuters or Bloomberg or whichever service you prefer to read up on that story. So if we see that geopolitical tensions escalate over oil or something like that, we could see Japanese yen and Swiss franc go up, as well as the safe haven assets go up. So just keep that in mind, which will be more triggered based on geopolitical situation as opposed to the data that's going on. So make sure you read up on that, but keep an eye on that scenario as we are going through. Okay, so going back to our news here, we have RBA Governor Lau speaking here. Reserve Bank of Australia has been sort of dovish. They are open to cutting rates further. So any comments to that effect will likely have a negative impact on Australian dollar. So keep an eye on that. But if he says whatever's been said before, then I don't expect much of a change based on that. Consumer confidence numbers here, these are very important numbers. So if we see these numbers drop below the expectations here, that will likely have a negative impact on US dollar here. And then we have trade balance numbers. Here, trade balance numbers are very important, especially these days when there is so much focus on the trade. So New Zealand being a close trade partner with China, if their numbers are below expectations, that will have a negative impact on New Zealand dollar. But if they come above expectations here, we're likely to see New Zealand dollar go up. So just keep that in mind. And then we have monetary policy meeting minutes from Japan. Very important here, we have Reserve Bank of New Zealand interest rate statement. So at this point, not expecting an interest rate cut, but again, the commentary will be very important. Going back to the same thing that I have said before, if the comments point out that they are concerned about US and China trade relations, that could have a negative impact. But currently, US and China, they've been talking and they've been working towards a trade agreement. A lot of the tariffs have either been delayed or they have been removed on certain products. So right now things are good in terms of the US and China situation. But if New Zealand is concerned, or New Zealand Central Bank is concerned, that is likely to have a negative impact on New Zealand. But for now, I don't expect too much of a change because they're talking. So Wednesday here, not a ton of important data. We do have a couple of FOMC members here. Again, anytime there's FOMC members speaking right now, it is important because we saw that Fed didn't really do a whole lot. They cut the interest rate, but besides that, they didn't do anything, and they're open to having an expansionary monetary policy. They're open to cutting more rates, but they did not tell us when they're likely to do that. And we saw that President Trump was not very happy with that stance from the Fed, but that's what Fed's telling us. So if the FOMC members say something that is different than what Fed has said in their statement, that could have a negative impact on the US dollar. And that would be if they're talking about more expansionary, more cuts and things like that. So that will likely have an impact or negative impact on the US dollar. And then, of course, we have crude oil inventories. We saw that the whole Saudi oil attacks there, the production is supposed to come back to normal levels. It's not supposed to take too long. So that's why oil kind of dropped after that initial move to the upside. So if we see that there is a bigger drawdown on inventories, we could see oil go up as a result of that. Otherwise, I think that situation is sort of normalizing a bit. On Thursday, we have GDP numbers for the quarter. So again, if the data is a negative, we are likely to see euro drop, but US dollar drop, but otherwise it should be okay. This GDP numbers are usually important, so we have to pay attention to that. And then we have a ton more central bankers here back to back. We have ECB, Governor Carney, we have FOMC press conference here, as well as another FOMC member speaking. So very important to pay attention to what's said, especially with the Fed here, because like I said, President Trump wasn't very happy, and the Fed hasn't really said when they're going to raise rates, drop rates. So this will be important. And on Friday here, we have MPC member. I think that should not make much of a difference. These core durable goods orders, personal spending, another FOMC member. So huge week for FOMC members. So expect volatility in the US dollar based on that. So we have tons of that. And then we have consumer confidence, our consumer sentiment numbers for the US here. So that's it in terms of news. So a ton of central bank activity this week. Okay, so let's move on to our charts here. So we'll start off with Euro US dollar here. We see that price is still trading in this range here. This is the daily chart that I'm looking at right now. But we can see based on the daily chart, price is still trading in that range. And this is where it seems to be stuck at between 1.1080 level and then 1.10 or 1.100 level. So this is kind of where it's stuck at. So very narrow range at the moment. So we need to see which direction price wants to go. So going to our weekly chart here, this is our This is the range it's currently trading in. So we saw that price went into the resistance level and then it has dropped from there. So the candle close for the week here is a bearish candle close. So at this point, bias will be bearish. Now we saw on the daily chart that it's still trading in that narrow range, which means it could go back up to test that level. And if it stays below this resistance level at 1.1080, then we are likely to see a drop again and we could see euro go down further. But do expect that pullback because on the daily, the candle is not that strong. But as long as it stays below this 1.1080 level, I am biased more to the downside. So bias is bearish. I will look for price to come back into the bottom here. 1.0920 is our target here. So bias is bearish for euro dollar. For the pound dollar here, pound has been very strong and we have only seen a bit of a slide there on Friday. So one of the reasons pound has been strong is because of the Brexit comments that keep coming out in regards to EU granting an extension or EU being more open to granting an extension, or them working on resolving this conflict without a hard Brexit. So all those comments are positive for British pound. And as a result, we have seen a British pound go up. So in terms of the weekly candle close here, it's a neutral candle close. We have pins on both sides. So completely neutral indecision candle here. So in this case, the way I would look to trade this would be basically on both sides. So it is into important support resistance right here. So same thing as we talked about in euro, if it stays below 1.2580, then I'm looking for a drop. Now, we also have this support at 1.2380. So if it doesn't break through the support, it can go back into that range and it could get range bound for a bit. So at this point, I am neutral on this. I would look to see which direction or which way price breaks. So if it breaks the high, then I would aim for the next level here at 1.2800. If it breaks the support, then I would look for the next level at 1.2220. So for now, bias is neutral for pound dollar. Aussie here. Aussie overall has been weak. So we have seen this big drop here. So bias is bearish here. Seems to be a lot of momentum to the downside. So a bearish bias here. We could get a bit of a pullback on this candle, but otherwise bias is bearish. In terms of a pullback, we could look at 0.6800, but then I'm looking for a drop. So bearish bias for Aussie dollar, target is 0.6680. New Zealand dollar has been extremely bearish here. So bearish bias still. Now it has broken through that support level there. It has closed below it. So watch out for a bit of a pullback, potentially into 0.6300 level. And then now we have to go into the next level for target. So bias is bearish. And the move that I'm looking for here would be potentially pull back into 0.6300 and then a drop into 0.6200 and potentially even further. And for that, we have to zoom out. Next target is 0.6080. So bias is bearish. First target 0.6200, then next one 0.6080. Dollar CAD here, this one seems to be range bound at the moment. For the last almost a week here, price has just been in this area here. So this is a daily chart. So let's take a look at the weekly perspective here. So this is what we have seen. Price has been stuck in this overall range here. So we saw a turnaround from 1.3320 approximately, or 3,300 level. At this point, we are still stuck in a range. So my bias is neutral here. And with this, I think this one could go in either direction. If it goes into the high, this would be a good level to potentially look for a reversal. And if it goes into the bottom, we could potentially look for a reversal there as well. But essentially, I'm neutral on this, just looking to trade it within the range of 1.3320, 50 on the upside, or 1.3120 in the bottom here. So neutral bias here for dollar CAD. Euro pound here, this one we saw it came into the support here and has bounced up because on Friday, pound finally dropped there a little bit. So with this one, bias is bearish. We see it is into support, so we have to be careful because it could turn here. We have had many weeks of drop, and now we could see a transition. So for the first step, I would look for a retest of the bottom. And if it holds above this week's bottom at 0.8780, then chances are it will go back up towards the high of the week, which will be 0.8900. So that's the first range that I'm looking for it to go in. Now, should it break above that, then we could see it go higher into 0.900, or if it breaks below the support, then 0.8720 here. But overall, my bias here is neutral on this one as well, because I think we are at that point where prices could turn. So I would be careful trading euro pound. Euro Swiss franc here, so we see the last couple of days price dropped. And in terms of our weekly candle here, we do have a nice pin bar. Now, as you guys know, I like trading pin bars. So this is a good setup for me. Now, do watch out for pullback because we could get pullbacks here. For a potential pullback, first level I would look for would be, or let's just say 1.0950 is a good level for a potential pullback. So what I'm looking for is something like this. So bias here is bearish, and we're looking at 1.0840 as the first target, and then 1.0780 as the second target. So bias here is bearish for Euro Swiss franc. Pound Swiss franc, on the daily, we saw pound drop, but overall, this one is also a pin bar, but I like the pin bar when it's bearish to have a red body here. So this one's still bearish, still a pin bar. So bias is to the downside here. And in terms of the target here, first target would be 1.2200. So bias is bearish. And the move I would look for would be a potential pullback into 1.2380, or it could even go to test the high because that's where we have this strong support resistance level. So bias is bearish and target is 1.2200. Dollar Swiss franc, the US dollar was stronger, but as we can see, this one has also been getting stuck here. So it's still stuck in a range. This is the overall range we are trading in, and this is where it currently is. So for this one, this is the narrow range it's in. For this one here, my bias is more on the neutral side. I'm looking for it to trade in the range, so we could get a potential pullback into the tip of this candle here, and then potentially a drop. So first target would be 0.9850, and then back into this support level at 0.9800. So bias here is neutral, but basically I'm looking for a rejection of the high or even this candle here for a move to the downside. Now, should the geopolitical situation escalate, we are likely to see Swiss franc do well. So that means we could see this one drop as well. Okay, yen. So same thing here. If we see an escalation in geopolitical situation, we're likely to see all yen crosses drop. But if, let's say, those rumors die down and there's no more comments coming out of about deployment of forces or anything like that, then we are okay, and this one could continue higher. So what we see here for pound yen is that it is into resistance, and we have a small candle to the downside. So this is not, it doesn't have enough momentum to the downside, but I would say bias is still more to the downside. And one thing to keep in mind is we could see price go up to test the high. That's the only thing to keep in mind. But this is kind of what I'm expecting. Now, should positive Brexit news come out, or positive US and China news come out, or positive this whole deployment or the tensions, geopolitical tensions die down, then we're likely to see the yen crosses go up. So this one could just go higher as well. So that's the note of caution there. But otherwise, basically, I'm looking for a pullback and a drop here. So bias is to the downside. And target here would be 132. That's what I'm looking at. So slightly bearish here on the pound yen. Euro yen here, this one, euro has been weaker compared to our pound here. So we have a nice bearish candle close here. So bias is to the downside. 117.50 will be the first target. And then we're looking at 115.80. Sorry, excuse me. So bias here is bearish. And we could get a bit of a pullback, but overall, I am more bearish on this one. So 117.50 and then 115.80 will be the second target. Dollar yen here, dollar yen has also dropped here, and we have a doji here. So looking for a further drop here. So this large pin on the top suggests rejection. So now looking for it to drop further. In terms of our pullback here, we have potential pullback into 107.80 or 108.20. Those are both the levels I would look out for in terms of pullbacks, and then a drop here. So bias is bearish. First target is 106.70, and then second one is 105.80. So overall bias is more to the downside for dollar yen as well. Okay, so next, Aussie yen here. This one has been bearish. We have seen price drop nicely here. So bearish bias. Next target here, we're looking at 72 and then 71. So bias is bearish. And these ones we could get rid of. In terms of the pullback, I would look at 73.30 area for a potential pullback. So something like this. And then a drop, and then a further drop. So bias is bearish for Aussie yen. New Zealand yen, this one is looking quite bearish as well. Nice drop here. So bias is to the downside. First target, 66.60 level. And then we have, actually, let's just go all the way down, 66.20, then 65.80. So bias is bearish. And in terms of pullback here, I would look at 67.90-ish area for a potential pullback, and then a drop. So bias is bearish. And this is the type of move I would look for here. So New Zealand yen is also bearish. But like I said, just a quick note here, all the yen crosses are bearish. We have pin bar here as well. But just a part of the drop here came from the escalation in the geopolitical tensions. So if the tensions go away, right, if US is not trying to deploy forces in the Middle East, then those tensions will kind of drop back. And as a result, the yen crosses could turn around as well. So that's very important to keep in mind. But otherwise, bias is to the downside here. And first target 80.50, second target 79.20. So bearish bias for CAD yen as well. All right, so let's take a look at what our commodities are doing. With this one here, we are still going sideways. This is a daily chart though. So looking at the weekly, we see it's been trading in this price range here. So at this point, what I'm looking at is if the price stays below 18, then we are likely to see a drop. Otherwise, it could go back towards this 18.50 level. So my bias here is neutral. And we'll see that if the geopolitical tensions actually they get worse, then silver and gold are likely to go back up. So for silver, for now, the bias is neutral. And essentially, I'm just looking for it to trade between 17.50 and 18 and just stay there. But if the tensions escalate, then we could go all the way into 1850 here and even potentially higher. But for now, bias is neutral. An important thing to keep in mind here, this is also an important support level at 17.40 level or even 17.20 around this area. So if we see that silver drops here and then holds above this level, then overall we are still in this uptrend and we are likely to see price go higher in that regard. So for now, I am neutral on this. I would like to see which direction it wants to move in and then align to that. So neutral bias for silver. Gold here, gold has gone up and gold tends to react quickly to the changing situations here. So this is looking bullish for the day and for the week here as well. So bias is bullish and target here is 15.35. And then it could also go all the way into 1555 area. So bias is bullish. It rejected this level and now this one is looking bullish. So a bullish bias for gold. Oil dropped here from the high here that we saw based on the Saudi attacks, but now it's into support here. So this one, the weekly candle is bearish, but that's been because of the oil situation, the attacks and all of that. So at this point, so this one looks bearish, but the important thing to keep in mind would be how it reacts at the support level. So if it goes into the support level and still holds up, so I'm looking for a retest. If it holds up, then we're likely to see it hold up there and go higher, potentially towards this level. But if it retests the low and then breaks down, then we're looking for it to drop further here towards 53.75. So again, at this point, bias is a little bit more to the downside here, but if it holds above 57.50, I will look for a move up, otherwise looking for a move lower. But for now, bias is more to the downside with caution here. And this one could go back towards 53.80 level. But there's also in between, right? So we have 56 and then 55.20. So those levels are still present. So we have to keep an eye on those. But for now, bias is bearish for oil. Copper here, this is looking bearish. We saw price turn around here. So bias is bearish. It is right into support where it is currently or almost into support. So we do need to see a break of that. This is an important support level, so watch out for it. We do need to see a break, but bias is to the downside and target is 2.45 here for copper. Bitcoin, this one is not the latest chart because it doesn't take into account the weekend price action. But right now, it's kind of doing this pennant at the moment, and it's coiling, which means it could shoot out. So it's been doing this for quite some time now, a number of weeks, and it hasn't really gone anywhere. It's been neutral, just sitting here for some time. Now with this one, so we need to see, I think this is going to coil a little bit further, and then either it's going to break to the upside or it's going to break to the downside. Which side it will break to, we don't know at this point. So this one I'm again neutral on, and I'm just waiting for it to break out. And if you take a look at our horizontal range, as we can see, it's just been trading in this range for some time now and hasn't really managed to break out of it. It came into the support here last week, bounced off of that. Now this one could go towards the high here, and then it could bounce. We don't know. So I will wait and see which direction it wants to go in and then align to that. So bias for now is neutral for Bitcoin. Equity markets. Equity markets have been fun. They have been stuck in this range for a bit too. So this is a daily chart that we are looking at. But as we can see, price hasn't really done much. It went into the high here, and then this one has dropped. So looking at the weekly here, we have a pin bar here. So bias is bearish. First target would be 29.50. And then we are into this 29.40, which is close enough, but 2,900. So for now, bias is bearish. What I'm expecting here is a bit of a pullback and then a drop. So something like this is what I'm looking for. But again, keep an eye on the geopolitical situation because that could make a difference. With the equity markets, though, the US and China trade relation stuff is more important. So there was a one-off comment. I think it was not from President Trump. President Trump has been awfully quiet, so which means something could be brewing in the back end. So keep an eye on the tweets because he does like to tweet, and when he's excited about something, he likes to tweet about it. And if he's not tweeting as much, that means there's something going on. That's just my personal opinion. But again, do keep that in mind. With this one, the comment that came out was from one of his officials that said that the trade conversations are not progressing the way President Trump would like or US would like. So that was just one-off comment, but it could be a start of more comments, right? So that's where we have to pay attention to any comments that come out, because if we start to hear more of those comments, then equity markets are likely to be negatively impacted by that. And then safe haven assets will be positively impacted by that. So just keep that in mind. We are coming into that October 1st deadline where they're supposed to start talking again. So for now, though, bias is bearish. I'm looking for a drop here. 2950 first target, 2900 as second target for S&P 500. NASDAQ, same thing here. This one has also been trading in this range. It hasn't really done a whole lot. We have seen price drop on Friday. And if we look at our weekly chart, we do see that one, it's into support, right? It's very close to support. So for me, the bias is bearish. We saw an indecision candle and then a pin bar. So bias is to the downside here. I would look for a further move to the downside. So first target is 76.80. And then the second target here would be 75.20. So bearish bias here for NASDAQ as well. And then DAX here hasn't really done much. It's trading sideways. So bias is neutral. In terms of the targets, I think this one could drop down into 12,250, or it could go higher here as well. So right now I'm just neutral on this. I'll wait and see which way it breaks. If it breaks the support, then I'm looking for 12,150. If it breaks the resistance, then I'm looking for 12,600 as the target. For now though, neutral bias here. FTSE here. FTSE has also been sideways here. We haven't really seen a whole lot of movement. We have a neutral candle close. So this week we could see a drop here, 72.20. So my bias is neutral, but I think we could drop towards 72.20 if the other equity markets turn. This one is likely to turn as well. Nikkei here has been very, very strong over the last number of days here, number of weeks here. So on Friday, we got the first real red candle. So this one is a pin bar. It is into support. So it has to break the support for this one to continue lower. But like I said, if the geopolitical tensions escalate, we are likely to see a drop in this one as well. So right now, bias is bearish. We could get a pullback towards 22,100 or all the way into the high. And then I'm looking for price to drop if it doesn't go through that. So for now, bias is bearish. 21,500 would be my target for this one. And that brings us to the end here. And if you would like to download the, if you would like to see my spreadsheet here, you could go to, or receive my spreadsheet, I should say, tradingwithvenus.com/forecast. That's where you would go to get the spreadsheet. So that's it. You guys have a wonderful weekend trading, or not weekend, a wonderful week trading, and I'll see you next weekend. Bye for now.